Why does every trade show two prices instead of one? That's because of something called the bid and the ask. Let's break it down in under 2 minutes. The bid is the highest price that buyers in the market are currently willing to pay. Think of it as what people are bidding for an item. The ask is the lowest price that sellers are willing to accept. It's what someone is asking for in order to sell. And the spread is simply the difference between the bid and the ask. It's the gap between what buyers want to pay and what sellers want to receive. Here an example. Imagine you're at a market buying fruit. A seller asks $5 for a basket of apples. You, as the buyer, only want to pay $4.50. That 50 cents difference is the spread. In trading, the same things happens all the time. Buyers push the bid up, sellers push the ask down. And somewhere in the middle, a deal gets made. The smaller the spread, the cheaper and easier it is to trade, especially in highly liquid markets like big stocks or currencies. So remember, bid is what buyers offer, ask is what sellers want, and the spread is the gap in between. In the next video, we'll take a look at how brokers connect you directly to the market. Thanks for watching, and if you like this video, subscribe for more trading basics.